Okay, before we introduce this week's guest, I feel like I need to make a bit of a confession. This guest's last name made me think baseball, and I secretly hoped there would be a connection. There was, but not quite in the way I thought. Hi, I'm Dave Price, and this is the American Farmland Owner Podcast. Luke Worrell has been in the farmland real estate business for about 2 decades. He and his wife took over the business that his dad founded in West Central Illinois. But Luke did not envision this life. He actually started his career after college working in Florida, and here's where baseball comes in. He worked for my beloved St. Louis Cardinals. The Cardinals, by the way, back in the day, once had a stud closer. He is Todd Worrell. Now, the last names, Todd's and Luke's, they're spelled exactly the same, however they pronounce it differently. Todd Worrell, our guest, Luke Worrell. Anyway, random tangent there. Luke, after Florida, moved back to Illinois, and he has been immersed in farmland and real estate ever since. The Illinois Society of Professional Farm Managers and Rural Appraisers puts out the annual Illinois Farmland Values and Lease Trends, and Luke is the chair of the committee. So he really digs into these numbers, and he has seen that farmland values in Illinois moved in a different direction, especially if you look at the beginning of the last quarter of 2024. We're going to get deep into this report in a few minutes, but first, let's trace the journey of how Luke returned to farm country. Let's start with a little bit about your background. Talk about the family business. No pressure taking over for somebody who started this, perhaps, right?
Correct. Yeah. So I'll try to keep this short so it's not a 2-hour podcast. But, so Worrell Land Services, the company that my wife and I now own, actually began 30 years ago, 1995. My father started it in just the spare bedroom of our house at the time. He had been a farm manager for a local bank back when there were a lot of local banks.
Yeah.
And he kind of read the writing on the wall that there were going to be some changes. And so he kind of jumped out on his own and started a farm management company. I certainly didn't appreciate the bravery of it when I was 13. I certainly appreciate it now.
I'm sure you do.
I can assure you. So yeah, we started as just a farm management company. And then over time, we've grown to real estate and to appraisals. I joined the company in 2007. My wife joined the company in 2014, and then in 2018, Allison and I bought the company from my father, who's still around and plays a role as well. So, yeah, we serve West Central Illinois and other parts of Illinois at this juncture, honestly, with farm management, real estate, and appraisals. And I think one of the reasons it's worked so well is it just happened very organically. It was never like predetermined as a youth that I was going to do this. Truth be told, I went to school for something entirely different, and it just so happened.
What'd you go to school for?
Sports management and business. So I worked in sales and marketing on a sports level. Actually lived in Florida after college, and when we were married, we moved back to Central Illinois for my wife. Got a really good job offer. For those of those listening in Central Illinois, you realize professional sports isn't exactly flush with opportunity.
Not yet. You never know.
Yeah. So, yeah, I just kind of, obviously I grew up around the business. My grandparents farmed, so like I love ag. I just didn't discover that I wanted to do this as a profession until I was an adult, honestly. And so, when I was in my mid-20s, I just kind of started helping out as I was shuffling my resume other places and kind of discovered my love for it. And I think that's one of the reasons it's worked out so well. So fast forward 30 years and here we are.
And here you are. And what's more pressure, taking over dad's business or working with your wife?
Dad put very little pressure on me. Pretty much all the pressure I face is self-inflicted, to be honest with you. My wife and I, we work really well together. We kind of complement each other well. Kind of some of the things that I feel that I'm good at or gifted at is something that we need, and some of my deficiencies is stuff she's really blessed with. So we work really well together. We get a lot of interesting comments when we meet people and tell them we work together, as you can imagine. Usually it's, followed up with, oh my gosh, I would kill so and so if I worked with
Uh-huh.
them. But it
Hmm.
works out well. It really works out well. So we're blessed, fortunate.
That's awesome. Um, so what do you all because of this, you get to see this from a couple of different ways. What are you experiencing right now in the business? We'll get to the land report here in a sec, but what are you seeing in your day to day?
Yeah, I guess in general, one of the things I love about my day to day is that every day is wildly different, and
Hmm,
especially pretty much any sector of the economy right now could be described as volatile.
sure.
So certainly there's a other level of uh, w- curiosity or uncertainty in the business. With farm management, that's still a big part of our business. So like this is kind of an exciting time just because planning's around the corner. We're starting to get a little more consistent sunshine. But certainly, a lot of the things that everybody's probably talking about, commodity markets and how will, tariffs and things like that, affect, possible farmland returns here this year, filling out all of our forms for the ECAP payments, getting fired up for farm visits and that stuff. So it's an exciting time in the farm management sector. In the real estate sector, historically we see most sales, kind of between that October and March timeframe.
Yeah.
That's still historically when we see most transactions. I will, just over the course of my career, though, I still think you see farms come for sale throughout all periods of the year. So I think we've actually been a little bit busier
Hmm,
from a transactional standpoint. We'll get to this in a minute. I mean, prices are down.
sure.
But the number of transactions are probably higher than they were last year, and we still have a large number of prospective buyers. They just maybe are a little more disciplined than what they were 2, 3 years ago.
And transactions can be driven by, a variety of measures. Is it retirements? Is it, the sort of the downer side of it would be people just realize, coming to the point like, man, I can't do this anymore. Like, what is there kind of a trend you're experiencing?
You know, the sad fact of it is most of the sales stem from people passing away
Sure.
and
Okay.
estate planning. And so I think there's almost always going to be a little bit of a built-in scenario that feeds you a certain amount of sales. I think there's a little bit, of selling while the market is still strong. I'm not saying it's going to go down substantially, but we're obviously off our highs.
Yeah.
And so I think some people are like, okay, now we thought about selling last year and we thought about selling 2 years ago. We really better sell now. So I think there's some of that where people feel the pressure to get out while prices are historically still strong. Um, I think in my industry you always hear about, oh, people are struggling and a lot of these are financially driven sales. We see those occasionally, but I feel like we usually the bark is louder than the actual bite in that regard so far. I mean,
Which is
we'll do
good.
it.
That's
Yeah,
good.
yeah, it is. It is. Yeah, we'll see what kind of year we have this year, but it comes from all over.
Okay. Talk about the report and particularly the fourth quarter last year. What was going on fourth quarter?
Yeah, so for those of you familiar with the report, I actually hated the fact that we had to stop our data at December 31st,
Hmm.
because I feel like it didn't necessarily give the whole story. Because in 2024, we were kind of treading water, and then certainly kind of started to go down right at the
Mm-hmm.
tail end of 2024. I think you really started to see it. This report that we come out with every March, just it cuts off at the end of the calendar.
Sure.
So for those who were there in Bloomington in March, really what we saw was that this first quarter of 2025 is really when we kind of saw the bulk of our, pullback or whatever you want to call it. We asked people from all over the state, and, really pretty much on average, people are saying that we're probably down somewhere between 10 and 15% off of the highs of, let's say 2023, late 2022, when things were euphoric and everything was going nuts. We probably have pulled back 10 to 15% speaking broadly. And that started in Q4 of 2024, but really just kind of took shape here in the first quarter of 2025.
So you've done this long enough to give you some perspective on this. Was it, were those values kind of an artificial sugar high?
They were certainly at one point in 2022 where it was pretty chaotic, and I've said this before, as those of us in real estate in 2022, truth be told, it was pretty easy. Everything went to auction.
Uh-huh.
In the past, certain farms would go to an auction. 2022 is like throw everything at the auction because we didn't even know what to ask for because the market was moving up so fast that it's like let's just put it in the public forum and it's gonna shake out
Do
how
its
it
own
shakes
thing,
out.
sure.
Yeah,
Yeah,
and
yeah.
everybody's gonna feel really good about what happens that day. Um, I think we kind of started to come back to reality in late 2023. I'm honestly a little surprised we didn't see a quicker pullback in 2024. Speaking from experience, if you look back at kind of like the values that we've seen in land, kind of where we're at is honestly pretty similar to where we were 10 years ago. If you can pull back, if you could pull the calendar back from 2012 to 2014, we saw a big jump up, kind of a boom in the market. Prices were great. And then we went down about 10 to 15%, which is kind of exactly what we're doing right now. And then we kind of just, you know,
Hmm.
treaded water for a year or two
Hmm.
until we got another reason to shoot this thing back up. So I know a lot of people look at charts, and I think, if you look at the chart from 10 years ago, it's very similar to where we are now. So it wouldn't surprise me if we kind of tread water, like I said here, for a bit. Um, I certainly don't think we're like standing above a trap door. That's definitely not the impression I want to give anybody who's listening to this. Yes, we've pulled back. I think it makes sense that we've pulled back. Um, we went up 50% in 2 years. That's not exactly like sustainable.
Sure.
So, I think we're kind of settling into a new norm here for a bit.
How do you, when you're talking to folks about this, especially those who are maybe, we'll call it seller's remorse, maybe, I don't know, or almost seller's remorse, that they're wondering, dang it, did I miss my chance? I'm
Hmm.
77. The kids don't want to take over. Maybe I should have cashed out, and I should have done it, a year and a half, 2 years ago. How do you almost counsel people that, and maybe that's a bad example when you're starting to get up there in age a little bit, but if you have somebody kind of looking at the longer picture here and bigger picture, I'm just thinking, when we go in and meet with our financial advisors about stuff like
Right.
2025 has been hard, right? Like you're looking at that and you're going, especially if, I'm a middle-aged guy, if I'm an older guy, and this is my retirement and I'm living on it, I'm going, now wait a minute, my stuff's
Right.
down 20%. What the heck am I going to run out? And I would think some of this kind of goes the same way when you're looking at the values and you're going, dang it, should we have gotten out a while ago? But you've got enough perspective to know, all right, maybe this is similar to what we did 10, 12 years ago, but we also saw what came after that.
Right. I'm typically more of a glass half full guy, full disclosure.
Hmm.
Um, I think the first thing I would tell people if they're upset that they missed the peak of 2 years ago is I would say what you quote unquote would settle for today, 5 years ago would have been a record. So I mean, even in my home county of Morgan, there was an auction not long ago in the Class A soils. Two of the big Class A farms went for 16,900, which shows a definite pullback from where we were. But if you go back just a little bit farther, literally 5 years ago, that would have been a county record. So I think historically our values are still way up there.
Hmm.
I think it's incredibly hard to hit the market, whether you're talking land, commodities, stocks, whatever. Um, so I think there's some solace to be taken there. It's that it's not, we have not like just cratered or gone down a roller coaster. We're still historically really strong. Very few times over the course of recent history have we gone down multiple years in a row. 2024 was the first, and really we were down 1 to 3%. So very marginal. I think this year obviously will show a further decrease, but I think yes, everybody's going to be upset when they don't sell for the absolute top dollar, but there's a lot to take comfort in still, honestly.
And who's buying?
Yeah, so I mean, largely, and this has been the case from the get-go, is local owner operators is a vast majority of the buyers. And then certainly if you tie in kind of what I call like local money or local investors, maybe
Hmm.
a dentist or an attorney who came from a family farm and whose brother still farms, like that demographic, along with farmers themselves, still make up, over 80% of our buyers. I think, you know, uh, when people see large investment funds or maybe even a celebrity, buy land, that's a good headline and that's an interesting read, but that's still the minority. So it's still local investors and owner operators make up a large, large majority of the buyer pool.
And are you getting new to the industry folks at all, or does almost everybody have some kind of connection, previous connection?
Say 2 years ago when the market was hot, everybody was kind of looking.
Okay.
I would say now, honestly, not as many like new, like, hey, that might change. But right now, I feel like here in 2025, the people we're working with are people who have owned land or have some familiarity with the ag sector.
So they actually know that it's real work.
Yeah, yeah, they're not chasing, yeah,
A quick return.
a quick fix. Yeah, yeah, for sure, for sure. The word's out that it doesn't always work like that. So
And uh, how is everything? I'm thinking about commodity prices, and you're um, outside the booming metropolis of Jacksonville, which I think is that's probably the largest around the area, right?
I actually live in
Springfield,
Springfield. But yeah, Springfield is the largest
the
town in
biggest one around there, yeah.
yeah, yeah.
And you're in Springfield, right?
Yeah, our office is in Jacksonville, but my family lives in Springfield.
In
Yeah.
Springfield, right? Okay.
Yeah.
I remember taking a trip to Springfield as a kid to go visit the Capitol.
Yeah, absolutely. There was Springfield is big for elementary school field trips. Big on that.
So how do things feel to you? I know in Iowa, one of our struggles is that the ag economy, like it has everywhere, has changed. You don't have the same kind of population base in these rural areas, and so more than two-thirds of our counties, and we have 1 million counties in Iowa. We have 99 of them, almost all little squares all over the place.
Whereas,
But you're looking at about 70 of the 99, something like that, shrinking in population. And
mhm.
so I'm always curious talking to folks in their pocket of life there. How are these communities faring? Are you dealing with all these same things where these smaller communities are shrinking population wise? And so it's incumbent on the folks still there to kind of expand the ag operations because those are the people who live there. And do they have almost like the supply chain, and I'm kind of counting that as everything, but everything you need, the schools, the store, the supplies, everything,
Mhm.
the personnel, everything. Like, how do you feel that? I'm going to make you be like an economist here a little bit, but what does
Sure.
that feel like to you? Because you cover a pretty decent sized area.
Yeah, what you just described is very similar to some of the stuff we see here. Um, it's interesting, and I can't exactly put my finger on it, but I feel like a lot of the small communities I drive through, for instance, when I'm done here today and done with this meeting, I'm doing a bunch of farm visits kind of on the southern edge of my territory.
Okay.
I'll be through a ton of small towns today, without naming names because I don't want to offend anybody.
Yeah.
I feel like here, at least what I've noticed is there's not a lot of gray area in those small communities. I feel like a lot of the communities have either like found a way to like maintain a little bit of their charm, if you will, They still have a nice downtown. They have, families still really engaged in local business, and they're hanging in there really well. Or real deprived of opportunity, and honestly probably below the poverty level. I feel
Hmm.
like there's a growing disconnect in those small communities where I think a lot of them either like really haven't figured out, or they're really like beyond the state of return. And that's always hard to see. And I don't, and even some of those two scenarios are in the same county. So I can't even really, you know what I mean? It's hard to pick and choose, like, okay, well, why is this town
Hmm.
struggling and why is this community not? It's almost would be a great sociology experiment. So,
Yeah.
but yeah, we see that. I mean, as far as ag goes, we're pretty lucky here, in West Central Illinois specifically, where we have a lot of grain elevators. We have a lot of there's a lot of competition when it comes to fertilizer implement dealers. There's enough competition to kind of not only create a number of jobs, but to make businesses compete, and which has been good for the community. So West Central Illinois, I feel really fortunate, to be honest with you.
And sorry, I kind of veered you off your
Yeah,
as you were analyzing the report, but
sure.
um, your the growth that you all picked up, it's kind of the average quality land, right? That's what's holding on.
So the average quality of land, yeah, is actually held went up a little bit, which was shocking to us
Hmm.
in the report. We just assumed that everything would be down, to be honest with you.
Hmm.
But pretty much, and for those of you who don't know, we break the state into 10 regions, and we look at each 10 individually. And pretty much almost all of them showed a slight decrease in Class A and Class B land, but then almost a firmness or even a tick up for your C quality land or recreational land, which was really interesting to me. My theory, and this is my theory, not in the book. Um, I- you know,
Only
I,
on your YouTube channel, right?
Yeah, right, right. I think a lot of it, in my opinion, is a lot of the efficiency and tech that we've seen in agriculture. I think the yields that we see now on more marginal stuff is greatly enhanced for what that type of ground was capable of producing a dozen years ago.
Hmm.
So I think people are really starting to see value in those properties, and not feeling like they have to like play in that Class A premium ground to really get something that can produce. So, I mean, if you want to spend $16,500 an acre on average, or do you want to spend $10,000 an acre on average? And if you have confidence in your ability to grow a crop, well, doesn't take a mathematician to figure that out. That's my opinion.
You also mentioned recreational. So are you seeing enhanced interest in that? And if so, what are folks doing with it?
That's one I honestly really had a hard time pegging. Is we have seen a big increase, or I shouldn't say a big increase. We saw an increase in recreational tracks. Um, and even here in Q1 of 2025, we've continued to see a lot of strength in that market, which surprises me a little. And I think that could change. The recreational market is a lot of times related to discretionary income, because folks are buying that for a hobby or a passion. A lot of
Oh,
times you see a lot
okay.
of out of area investors buy that, people from all other states, chasing that great weekend journey to get that, deer you want to put on the wall. A lot of times discretionary income factors in. So I'm anxious to see this latest stock market drama.
Hmm.
I'm
Hmm.
anxious to see if that starts to nibble away at some of that strength. But so far it's right there. It's doing well.
And is that recreation to recreation? Is it transitional where they're converting to recreation, or what? Is there anything you've seen?
It's pretty much recreational to recreational.
Okay.
Yeah, yeah. I lovingly call them a combo farm, something that has a little bit of both. Um, some of these tracks are strictly, wooded acreage,
Hmm.
zero income producing acres. Some of them have, a patchy field here or maybe a field here that's in CRP. Those do obviously typically do better than, a straight block of trees that has, you know, no revenue stream. But yeah, the recreational markets, it's still good. That depends kind of what part of the state you're into, of
Sure.
course.
One other thing I wanted to ask you about when you were the report noticed an uptick in no sales, and you were joking about a couple years ago how easy this was, right? Like it was
Mhm.
tough to set a price, and you're like, "Hey, the heck with it, let's just throw it at auction and see what happens," right? And
Right.
everybody's happy when this thing's over. So what did you notice from the increase in no sales?
I think what we talked about at the conference too, and a lot of people suggested when I went around and asked certain people from all of the regions, is I think you're going to slowly see more traditional listings and fewer auctions. I think there is absolutely still a place for an auction. So don't get me wrong there. I think you're still going to see them. But prior to this boom, you used to hardly ever see a recreational farm at an auction or like a marginal farm at an auction. You just saw Class A stuff that really could get, a lot of eyeballs. And I think that's going to stay. But there for like, I joked 2022, 2023, like everything went to an auction.
Hmm.
And I think we're going to see a little bit of a retracing of our steps where I think people, at least people in my profession, are going to give a little more guidance and level set expectations to our clients saying, hey, an auction is far from a guarantee. In fact, depending on your kind of quality of land, it is inherently more risky. I think you're going to see more people go back to a traditional listing on those marginal pieces and recreational pieces, and perhaps even on Class A. But I think there still is definitely a time and a place for an auction, but I think it's kind of skewing back to where we were prior to this boom that we saw.
And I've heard some people talk about it's not necessarily a bad thing. Of course, if you're looking to sell, you want to sell, but sometimes a no sale can be all right. You just got to wait it out a little. Do you agree?
Yeah, I mean, there are times where if you have a no sale, a lot of times you still can get something done.
Mm-hmm.
Post auction. That
Mm-hmm.
that still certainly happens. There's also the risk that if you take something to an auction and you have too high a reserve, there definitely is a stigma. You can stigmatize the
Sure.
property because everybody and their dog knows that you tried to sell it,
Right.
and it didn't bring X.
Yeah, yeah.
So I think it would be pretty foolish to then expect, well, I'll wait 3 months and it's going to do this. That's not
Yeah.
the way. That's not the way the ag world works for sure.
Word
Um,
gets out.
yeah, yeah. So I think a lot of it just depends on your aversion to risk. A lot of it's just a personal choice too, truthfully.
All right, let's take us home with this. I was trying to feel you out on what it's like to take over Dad's business, and
Mhm.
so you originally moved to Florida, and you think you're going into the sports world, and you come back to Illinois. I'm hoping this makes you a Cards fan, but I'm nervous that you're north enough that you're a Cubs fan.
Die-hard Cardinal fan.
Ah, yes, sir. I mean, I could tell the intelligence that you exuded, so
Yep.
I assumed you were going to be
Yes.
one of us. I wanted to be sure.
Yeah. Yeah. In fact, in Florida, I worked at Roger Dean Stadium where the Cardinals have spring training and a minor league team. So I'm Cardinals through and through, 100%.
My man crush is gonna show right through to jump into your living room in Springfield. Wow,
Yeah.
that's awesome. In Jupiter?
Yes, Jupiter. Yep. Yep. So we had a blast. As you might imagine, Palm Beach, Florida, not the cheapest place to
No,
live
sir.
when
No,
you're
sir.
just married and have no money.
Yeah.
But we enjoyed our time while we were there for sure.
That's awesome. I'm wondering though, can you kind of close us out with, this can be a tough, draining industry, right? I
Mhm.
mean, you really get to know clients and prospective clients, and they have an all kinds of array of backgrounds, and some obviously it's sad when somebody passes, and you've got to move the estate, or
Mhm.
the joy on the other side when you come across some 23-year-old who just comes back fresh with a degree and wants to bust into the business or whatever. But at the end of the day, what is it about this of why you're doing this instead of paying ridiculously high real estate rates in Palm Beach, Florida, or Jupiter, Florida?
Yeah, it's a great question. I think you have to enjoy people to do this. And I think my wife and I and our whole team genuinely enjoys helping people. Are there days where we're like, oh my gosh, the people, they're driving me? Yes, those are yes, that happens, and that
Yeah,
happens in every industry. But I think,
sure.
I think we get to play a small role in some really cool stories. Um, some of them are uplifting, some of them are tough, but at least we take value and pride in knowing that we're shepherding people on this journey. And that can be in real estate, and that can also be in farm management too. So yeah, I think I love how every day is different. Every year is different. Things are constantly changing. My wife and I aren't wired up to just, in no disrespect to anybody who is this way. We're not wired to sit behind a cubicle and work on a spreadsheet from 8 to 5 and then clock out. That's just not how we're wired. So we enjoy the journey we're on with the people we work with and the people we work for.
Awesome. Luke, it's been great talking to you. Now you got to, speaking of people, you got to get out and
Yeah.
engage with them in a
Yes.
series of meetings. So appreciate the breakdown, and thanks for sharing more about your story too.
Yeah, no problem. Happy to chat anytime.
You can check out our profile piece about Luke in the weekly American Farmland Owner newsletter. You can find interviews, insights, and the latest news for farmland owners, investors, and the ag curious. It's a place where landowners get their news. Find it at AmericanFarmlandOwner.com. Thanks for joining us here on the podcast, and thanks for caring about the future of our farm.